Hi, I'm Michael Newrock, and welcome to the training lesson, Aggressive Trading. In this lesson, we're going to go over the basics of aggressive trading. You have a little bit more freedom than with conservative trades, but you should have more experience when trading aggressive trade setups. In one of the advanced lessons, 6 cents trading, we go over how you can identify aggressive trade setups that are about to become conservative trade setups, and they are really good because you're getting in at an earlier point and with the stability of a conservative trade. And when you think about it, the market is either buy only, bi-directional, or sell only. So at one stage, what I'm trying to say is that a buy only environment eventually can turn into a sideways or zigzag market, which then can turn into a sell-only environment, and vice versa, sell-only to bidirectional to a buy-only. So aggressive trades are really good if you can catch them and if you do have the experience to use them. The trade assistant and the indicator are set up for both conservative trading and aggressive trading. So I look forward to your feedback. Trading aggressively can be a way that generates the largest possible returns, again, because you can get in on the market a little bit earlier than when it's a conservative trade setup. To trade aggressively, you can enter trades in either direction. So let's have a look at an example. The following image shows an example of a bidirectional overall trend direction. Okay, that's the top one here, the blue bidirectional arrow. So an image shows an example of a bidirectional overall trend direction with no more than 3 of the directional arrows that represent the trends and swings of each of the 3 higher time frames pointing in any one direction. So we've got 1, 2, 3 pointing up and 1, 2, 3 pointing down. Now it doesn't matter which ones are pointing up and which ones are pointing down at all, and you can see lots of different combinations of this that make up an aggressive trade setup. But as long as there are only 3 arrows of the higher time frames pointing in any one direction, you're going to get a bidirectional double blue arrow here. So take a look at this trade over here. We've got the overall directions bidirectional. Only 3 are pointing in either direction of the higher time frame analysis. And you can see here there was a sell, a couple of sells here with a couple of swings, then a trend buy and a buy swing. Swing within a trend. So you can trade in both directions when it's bidirectional, but it's just important to be able to manage your trades, or appropriately for that particular environment. So in this case, we're interested in entering long or buy or short/sell trades. The overall trend direction displays a blue bidirectional arrow. Okay, blue bidirectional arrow. And it does not matter which direction you trade as long as 3 of the arrows are pointing in the direction you are trading. However, during a period of bidirectional price movement, you need to be aware that the market may change to a unidirectional market against your position, which is what I was saying previously. Let's say you take a buy and it's a bidirectional market. It's a blue arrow, and suddenly price moves down. One of the higher time frames turns from a green to a red, and suddenly you've got 4 reds against your position, which makes it a sell only. So it just means that when managing the trade, any counter signals should be responded to in a defensive manner by either tightening your stop loss or reversing your position. So, sometimes reversing your position is the appropriate action to take, because if you're trading in the wrong direction and suddenly the profiteer system is saying it's no longer a bidirectional market, it's a sell only, then to keep that buy trade in, you're living on a bit of hope there that the market is going to change back to at least a bidirectional market and go back in your favor. And that can sometimes happen, which is why I say sometimes you may want to tighten your stop. So if it does move against you, then at least you've limited the pips that you're going to lose on that particular trade. Or you could just close out, accept your losses if you're in a losing position, or if you're already in a profitable position, then at least take some profits and then look for a trade setup, in this case to the downside, because if it changed to sell only, that's what you want to be looking at. And it's better to move quickly and adapt to the environment than stay in a losing position and hope to ride it out, because quite often these moves against you can move further than you would have expected. That's basically exactly what they're planning on with stop loss hunting. We'll go over that in a webinar, but that's pretty much aggressive trading. It's a great trade setup. There are a couple of not quite as many rules. It's virtually the same except for a slight difference in rules, but you can trade in those bidirectional markets, which can make it very opportunistic in nature. So when trading aggressively, I'll just finish off by saying it's typically a good idea to keep your stops tighter, or to maintain the rules of the system with your stop loss, to at least trade with lower lot sizes. So let's say you normally trade half lot positions, then maybe on an aggressive trade, depending on the trade, and again, it's a case-by-case basis, and we can look at this with any that you upload, or see what other members have done in the forum, as well as in the chat room, of course, and the weekly webinars. But at least lower your lot size, potentially. I'm not saying to do so, because you might have a compelling reason to trade at the normal lot size that you would, but good idea to either have smaller stops or lower lot sizes, or both. And also set your first 3 profit locking targets at easier to achieve levels, because let's say you're in a buy trade and your first target is, say, 50 pips. It may make it easily or easier than in the bidirectional aggressive environment, because it's buy only, so it advances to that target easier. But if it's an aggressive trade, you may want to consider setting your targets a little smaller. So instead of, say, 50 pips for your first target, you set it at, say, 30 pips. That way, if the market moves against you, then you've locked in your profits sooner and more easier, and then if it goes against you, you've got your profits locked in, and look for another trade to the other direction if it moves that way. But at least you're not going to be in a situation where you set your targets a little bit too high, a little bit too idealistic, and the pair has trouble getting to that target, and then suddenly it moves against you and you're facing a potential loss. So I look forward to going over this in a lot more depth in the rules and the examples. Of course, check out the live trades as well, and of course in the forum, chat room, and in the webinars. Underneath this lesson, as normal, we've got an opportunity for you to download the video, or you can watch it again here in the members area. Download the special report that joins this lesson. A couple of tasks for you to consider, and some FAQs, as well as a direct link to the specific section in the forum where we'll be covering these details. So until next time, good trading, live well, and I'll see you soon.